Oh my gosh, Bitcoin just plunged to $104,000 overnight, shaking the market as spot Bitcoin ETFs see their largest daily outflows since August. Traders are liquidating positions left and right, and the gambling leverage casino is in full swing for perp traders. At the same time, the US government shutdown is now forecasting to last about 40 days if unresolved by Tuesday, shattering previous records. And while this channel isn't political, these facts have a real impact on the markets. Could this be another dead cat bounce today at closing with the 107,000 Bitcoin price? Or are we still heading lower? And here's the big kicker. There's over 19 billion in crypto shorts stacked above us right now, setting the stage for a massive rebound when liquidity does return. And I believe it will. What's up, family? It's Coach Masi, and you're locked in to the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, stay disciplined, and as always, stay ready for opportunity. Let's dive in. Let's start with the latest ETF numbers because they tell us a lot about where the market is heading. Spot Bitcoin ETFs just recorded their largest daily outflow since August. That's not just a minor blip. It's a clear signal that investor sentiment is turning cautious, and it's putting direct downward pressure on Bitcoin itself, as you can see by the Bitcoin price. Now, combine that with leverage trading, and things get intense fast. Investors who entered leverage positions in these ETFs are getting squeezed. In crypto, a small move downward can trigger cascading liquidations, wiping out weak positions almost instantly. That's exactly what we're seeing right now. But these liquidations are more than just numbers on a chart. They represent real traders getting shaken out, retail investors losing positions, and weak hands being flushed from the market. And here's the key. While retail panics, institutions are quietly accumulating Bitcoin at these lower levels. When you can't buy the dip, they can. They're positioning for the next major rally. You see, this is the classic pattern we've seen time and time again with Bitcoin. In 2017, Bitcoin drops, weak hands exit, institutions accumulate, then a massive surge follows. 2020, same setup, same outcome. You see, the crypto market is highly sensitive to leverage, and the bigger the leverage, the more extreme the shakeouts. That means today's chaos is tomorrow's opportunity for disciplined investors like yourself. So if you're feeling nervous watching the Bitcoin dip, remember, this is exactly the kind of market structure that creates outsized returns when volatility subsides and institutions take control. The weak hands are leaving, and the smart money is stacking sats quietly behind the scenes. You think Michael Saylor is nervous? I doubt it. Now let's talk about the U.S. government shutdown, which is directly affecting investor confidence. Forecasts now show the shutdown could last over 40 days if unresolved by Tuesday, breaking previous records of 35 days. That's interesting because contracts and other parts of the government are now partially shut down. And we need them to come back together because federal programs are stalled, it ripples through the broader economy, businesses get delayed with decisions, stocks pull back, traders grow anxious. See, this isn't political commentary, it's macro reality. No matter which side of the aisle you sit on, blue or red, Democrat or Republican, every day the government remains partially shut down, it creates more volatility. Bitcoin had another rough overnight session because of it, dropping down to 104,000 before rebounding slightly to 107K. At first glance, that might look like a recovery, but what we're really seeing is a classic dead cat bounce, in my opinion. So, what exactly is a dead cat bounce if you didn't hear me teach it before? In investing, it's a temporary recovery after steep declines, often giving traders a false sense of security that the bottom is in. The term comes from the idea that even a dead cat will bounce if it falls far enough. Here's the thing. This pattern has repeated all 5 trading days this week. Each day, Bitcoin dips, weekends panic, and prices bounce just enough to trick traders into thinking the market has stabilized. But the rebounds are short-lived and the broader downtrend keeps happening and continues to. Right now, a lot of traders are putting down leverage longs around 104K, hoping to catch the bottom. But the reality is the bottom may not be fully formed yet. Weak hands are still being fleshed out, while institutional players are quietly accumulating Bitcoin at these discounted levels, positioning for the next major rally that you need to be prepared for. And here's the kicker. There's currently, again, over $19 billion in open shorts stacked above the current prices. That's a massive buildup of potential energy in the market. When those shorts start getting squeezed, we could see Bitcoin skyrocket back toward all-time highs faster than most expected. This is why understanding market structure, leverage, and liquidity flows is so critical in Bitcoin and crypto. While retail panics and sales, institutions quietly stack Bitcoin for the next major leg up. You need to understand that concept. I keep repeating it so you know. And lower your anxiety. So while Bitcoin bleeds, let's not forget the bigger picture. Stocks are accelerating because volatility is spiking across equity markets, up and down. Fear is dominating trading sentiment. Meanwhile, gold continues to surge with a slight dip today, hitting parabolic levels as investors flock to safe haven assets amid uncertainty. This is classic risk rotation. Money leaves equities and high risk positions and flows into hard assets, and Bitcoin often follows that. The lesson here is simple. Bitcoin is part of the same macro story as gold. It's digital scarcity meeting global uncertainty. While retail panics, smart money quietly accumulates, setting up for the next massive move, but globally, still taking time to build trust, understanding, and full adoption. We're still growing. So, what does this all mean for Bitcoin? Yes, today was another bad day. And yes, markets are fearful. But these shakeouts, leverage liquidations, and macro uncertainties are exactly how Bitcoin positions itself for future growth. Pullbacks are healthy. They just suck when you own a lot like me and you. History has shown that when fear peaks, opportunity follows. That's why they have the Fear and Greed Index. Now I want to hear from you. Do you think 104,000 is a bottom for Bitcoin, or are we still in a shakeout phase before the next rally? Do we get under 100,000? Drop your thoughts below. Remember, this is not financial advice. Everything discussed here is for educational purposes only, for you to make your own decision with your own money. But if you found this update valuable, smash that like button, subscribe because we do this every day, and share this with someone who loves Bitcoin news as much as you do. Well, that's your daily hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.